The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this third day of March. My pleasure to be here, 11 o'clock till noon Eastern Time, and thank you to our great hosts. Wow, busy day today. We had a lot of information imparted here at TFNN. And what do you hear? We start off with Nico and Paige, 7 o'clock, all about health, really interesting program. Then, of course, come to John Logan. Another very interesting program. John's methodology and his all the different techniques he's developed really shows you parameters that are so important. I love the way he looks at the time frames. I mean, that's really important. Then, of course, Larry Pesavento. Larry always has interesting guests. Larry, of course, expert at the expansion, the Gartley and the expansion to the butterfly techniques, which he uses successfully all the time. Then, of course, you got Tom and Tommy going through the different thinkers, the different ways of looking at the Nadix platform. Great information there. Hope I can impart a bunch of information to you. And then we just continue all day. You've got your swimming lesson. You've got Steve Rhodes, you've got Dave White, and then, of course, you've got Tom. But in fact, I believe that John is sitting in for Tom. And then you go to Andy Hecht. I mean, wow. Thursday, full day. All right, let's just go to the numbers before I forget about them, because it's really important. I want to explain why we are, at this particular point, we are long. We're trying to remain long the Dow. Number of positions in there. Doing very nicely so far. Hey, day is young. There was the sell-off in the Chap Wave technique. My trend gauge was very successful yesterday. Remember, I was talking about it, imparting enough information to us to suggest that at some point there'd be a 9 to 11 point surge in the futures, which should translate to a good move up in the cash indices. Well, it was a move of 18 points, and then the market came back very strongly. And of course, what we're looking at here is a situation where I had another signal, and the signal said that regardless of where the futures are, even if they're up early in the morning, there should be a Dow pullback before a rally could be achieved. That's exactly what we've seen. Great indicator, something I developed a long time ago, but it's actually Richard Arm's work, and I just use it in my own methodology. Now what we're looking at is the E-mini is only down $1.75. You can see this beautiful up channel, which is stalled now because of these arch formations. Another arch formation is a G/B at 1987.75, and we're going to see whether or not it takes out the support at 1966, or whether it holds nicely here. Remember, in a very strong takeoff manner, the Dow tends only to have a doji candle like we had yesterday, we were expecting, and then an intraday pullback, and then it moves on. My rule of 136. This is the most important period. Are we going to now get a more than a 3-day consolidation? Is it going to go to 6? Or is there enough? Are there enough people that have missed the move to the upside? I believe there are, that there should still be further gains, even though there's some consolidation going on right now. And don't forget, Andy always talks about, in his show, talks about commodities. He always has articles that's Seeking Alpha today, just great articles to read. Just even if you don't, I mean, we actually have gotten way more into the commodities over the last couple of weeks for my subscribers, because we just missed getting into the gold ETF at one point. It just got away from us. And I kept thinking there'd be a pullback. Now I'm very suspicious of the dollar. I think the dollar is actually going to pull back, and how far is going to be really dependent on many things. So we've gone into the commodity index for the first time. I can't even remember when last we did this. Into one of the commodity indexes that has the gold, has the crude oil, has soybeans, it has the stuff. And we've got to start looking to see, will there be an inflationary move at this particular point? We'll get into all that. Let me do the numbers. The Dow's down 19 at 16,879. The S&P is down 1 at 1960, hard to see here, 1985. I should know that by now. So 1984. The comp index is down 9 at 40. I'm having trouble with these. I'll have to make them bigger here. Uh-oh. Not a good sign. The comp index is -8 at 46.94. You've got the VIX, which is still, it's actually down today. It's at 1678. I mean, it went right through that 20 level like a hot knife through butter. Yeah. And it just sliced to the downside. This is buying pressure. That's the reason all these sell-offs are seeing buying. Now, let me get rid of this here. This is the E-minis. Wanted to show that 120-minute chart. One of the reasons why I said we've got to be a little bit careful here is that we've extended higher in leg D. This is leg D in the E-mini. This is leg INDU. This is leg D in the Dow. Did we make a new high today? 60,900.17? Yes, we've extended leg D again. It's a real struggle the last 2 days to get there. So this tells me you've got to be a little careful here. We should have some kind of a pullback. Oh, incidentally, for subscribers, my usual number 4. Oh, I really messed it up, didn't I? I forgot one of our long positions, but the rule, of course, is in my Trader's Corner that if I, for some reason, forget or make a mistake in the parameters, use the previous day's parameters. That's exactly what we'll be looking at. So that excellent gain that we saw got raised, the stop got raised. Okay, I just want to do that for my subscribers to my opening call. Let's just continue. So gold is now up 14 at 12.56. Silver's up 16 at 15.18. Silver might play catch up here. Platinum's up at 13 at 9.48, up 13. High grade copper, I love. It's at 2.19. We have a position in high grade copper which is up 25 or 6% or something like that. It was actually up 30%, 31% earlier in the day. I don't know where it'll close. We've got bonds up 13 at 163.02, and the dollar, let me just quickly do the dollar here because I don't want to take too much time because I'll be discussing it during the show. I do want to go to our first caller. Peak D is being made as we speak, and this dollar looks like it could pull back a little bit here, and that says to me that this fabulous action that we've been seeing in gold is actually going to leg C. Therefore, you've got that rectangle formation that says instead of the arch formation, you first have to climb all the way to close to. The reason why we got into this other trade is because it has some gold in it. And that high of 1263.90 in the continuous contract made on the 11th of November, you should get real close to that. This is leg C. There should even be a D within this chart formation. Okay, now we can go to our first caller. We've got Jennifer in Wellesley, Mass. Jennifer, how are you?
Good. How are you?
I'm well, thank you.
Good. I wanted to take a look at Ulta Salon. They're reporting next week.
Oh, okay. Do you have a position?
No, I don't, but I've been watching it for a while, and it keeps going up.
You know, this is one of those stocks that does some really crazy things to the downside, and then before you know it, it repairs the damage and goes on to new all-time highs. So I've got a notation for this that I've stuck with for a while, which suggests that it should make a new all-time high. We'll discuss it as soon as we get back. We're on with Jennifer in Wellesley, Mass. Dow's down 32, S&P's down almost 3. I'll be right back. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back, and we're on with Jennifer in Wellesley. Dow's down 29 right now. We're looking at Alta. Alta is the symbol for, let me just go back to this chart here. I want you to show some resistance points. This is Alta Salon Cosmetics and Fragrance. Now, I've had this theory for a very long time that out of all the sectors and out of all the stocks within sectors that should be the last to feel some kind of a recession is the cosmetic and fragrance area. I have reasons for thinking that, and the reason is that most women will hang on for a very long time before sacrificing the quality of or whatever it is that they, whether or not there's a recession. And men probably have to do the same thing with beer. I'm not sure what the connotation is. But this is the way it looked. And if you look at the chart, that kind of, I mean, this is the way it's been. I had this alternate count. That's a possible alternate count. That is for Alta in the weekly chart of a peak C maybe being a G. I can't make that case because the low that was made on that was back in August went down to 120.38, and I looked closely, and there were trades that were below quite a lot of trades actually below the 128.11 low that was made in the week of February the 6th of 2015, which started the new buy mode. So that to me that automatically negates a buy signal, and now you have to start over. So it seems to me that if the market, which is just about, it's bumping into resistance now, if we can go just another couple of days without breaking down, but instead holding well with slightly higher highs, there's a chance. I've got 178.38 as in the Chapman Wave resistance and support level automated system. I've got 170.95 in the 10-minute. I've got a whole bunch going up to 168 in the 120-minute, and we've gone higher. Right now we're trading at 169.10. There's a lot of evidence here to suggest that it might not just be market related, But if the market does hold up, it's going to be good for Alta. So this is the way. Are you able? Do you put in the trade, put in a stop or something, and then just leave it, or are you following it very closely? Are you able to monitor it fairly closely, or you just do your job and let it be?
I am able to monitor it, and I would put in a stop if I did buy some.
Okay. Now, do you ever use options?
No.
You don't. Okay. Because if you did use options, it would be a lot easier. Because I would just say to you, on the next dip, I'd buy the 170. What did we March? I'd buy the 170 March call, which closes out. Let me just double check. Maybe I'm mixing up my dates here. But, oops, I did that incorrectly. I wanted to just check to see when, not even sure. Oh, yeah, we've got this Friday, and we've got time. Yeah, so that would have worked out. All right, so you don't do options. Okay, here's my suggestion. I've got a leg D with the 200-period exponential moving average in the 120-minute chart at about 168. So that's about a point and a quarter lower. I'm going to make the suggestion that says two things. One is, you could start a very small position right now at 169.24, leg A in the daily. I'm not sure it's going to go all the way to a leg B and a C and a D, but there should at least be a leg B, maybe even a C, if it's able to challenge this Grand Canyon slide from the 3rd of February, 4th of February, 5th of February, right down to the low it was made on the 9th, and then there was a little bounce. So it's going up against those bars. I like what I'm seeing. I've got what I call a Chapman wave squash between the stochastic and the MACD, which suggests that there could be a very quick peak A to a B, and then maybe a C, and then you've got to wait because the D comes much later because it needs the MACD to complete that pattern. So when did you say earnings are?
They're next week, on the 10th.
Okay, 10th and today. So it's a week from today.
Correct.
Oh, I think that's good. Okay. So I'm going to make the suggestion. You can either just wait a little bit at 169.19, but I would look towards the 166, 167, somewhere between 167.10, just over 167, to the 164.50 area. That's the perfect place to at least initiate a bigger move, a bigger position. Because at that point, you only need to put in about a 3-point stop, because if it takes out the 161 or 160 area, then it might have a real struggle to get back to the high of today. But if it can hold real nicely, and the way the pattern is looking at, I think this is acting very well. Here's my suggestion. Start a position right now saying to yourself, this isn't the real position. But if it goes up from here, then in 2 days' time, give me a call. Maybe what's today? Thursday, Monday. We'll add to that strategy. But in the meantime, I'd start a position here at 169.32. Even with the market now pulling back, Dow's down 64, S&P's down 7. This is still holding well. It's +1. I like that action. So start your position. But the real position will be if it can go down towards, let me say 167, between 167.50 and 166.90. That's really where you want to establish a little bit bigger position. And then I would add to it, if by next week the market is actually coming back again, the Dow's trying to challenge the 17,000 level, Alta should in fact break the high of today of 171.19. And my target, it's a little difficult to get to the target because it's such a big bar from the 4th of February. The high is 173.55. So that's another 4.5 points. But that's a stock at this level, acting so well, I think it should try to get there. And what we want to do is to have enough of a gain that you can keep just a little bit as it goes into earnings, so that if there's a mistake, you've still got your profit. But if it keeps pushing higher, you're in it for that extra move up, which is like a bonus. So let me give the thinking a little bit now. Prefer to add a little bit more and maybe 2 points lower. Let's see how it holds there. And then as soon as it comes back and it breaks into the 170, 150 area, that's a really good sign. You can even add a little bit more. And this is a trade that you would put in until Monday. I don't know if the earnings come out in the morning or the afternoon, But that's Mondays where you start strategizing and saying, okay, if I've got a gain, I want to take some of the gain off. I'll leave a little bit left in case there's a sudden spike to the upside. But the MACD has turned down and stochastic in the monthly chart. The weekly chart is bouncing nicely. It's the daily chart that says there's a little bit room to move about another 6 to 7 points higher, and that's what I'd be looking at. Hope that helps you.
It does. Thank you very much.
And thank you very much for calling. And so that's Jennifer in Wellesley. Let's just look at a couple of things here. What I want you to look at was, you see the way gold is acting. Let me go to the GLD just for the moment, because most people do get the GLD, maybe not the futures, but the GLD they get. You see the way that it's moved to this leg D? So my thinking was, and oh, that's leg D, right. Leg D is D there. I think it was a C in the actual gold contract. Let me just double check. Yeah, it's a leg C in the gold contract, leg D in the GLD. I wanted to discuss that as a pattern and why. I didn't want to get too heavily to go into the GLD because there's just a little bit left on the upside before it comes right back into this area to retrace. I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Some really interesting questions I had during the break here, but let me just show you this. This is a pattern that I'm very familiar with. It's one of the patterns that we look at, we use as trading vehicles. We just do a bunch of stuff with this. Let me just make it bigger so you can see. So I'm expanding. This is the daily chart of the GLD. And it has, I'm going to be real strict about this. I'm going to call this C. I'm not going to use that alternate count. This is C, B, and that's an A. All right. So then we're in leg C, both in the gold continuous contract in gold itself. So the pattern that I discussed is one that goes like this. There's a flag, we call this a flagpole, right here. The flagpole's right there. And within that context, going down to there, I'll make it thick, pointer right there, right click, style weight, make it nice and thick, style, start as single right there, and make this weight is bigger, make it color that you can see through, transparency, 70%. Okay, there's the actual candle, but I'm taking it down to that low there because it was a gap up. Within that context, there is a rectangle formation going to the high of 120.84 and a low of somewhere around, let's take the low right there of 114.74. And normally what I'd say is look for a Chapman wave buy mode that takes you within the context of this rectangle in a shorter time frame to a peak A, a B, a C, and even a D. And it should be close to, exactly on, or just above the previous high of that pole itself. That would be the 120.84 area. Well, lo and behold, what have we got? We've got the GLD, which has gone peak A, B, C, and then within it, it's even got another buy mode, which is really powerful and says, when you take out the previous high, not only are you going to go to a leg D, but it should go quite a bit higher. Well, lo and behold, it went from the high of 119.86 to so far today's high is 120.30. So that's quite a bit higher. That says right now you got to be a little bit careful. You don't have to get the D in the actual context of the time frame you're looking at. It happens. It doesn't have to happen because you need to get it though in the shorter time frame. So we've already got that. So that's accomplished, number one. Number two is, within this pattern, I almost always draw an H. And that H, I just have to raise it or lower it depending on the price movement. But when it gets to or just a little above the previous high, that'll be 120.84, one has to be careful because invariably there's a pullback, and that pullback can take you to halfway into the rectangle. But if it breaks important support, you could even give it all back and start a bigger down move. At this point, the MACD is pulling back a little bit, nothing wrong. It's just pulling back a little negative, and the stochastic's gone under 80%, trying to rally, and that says the price is leading the technicals. So where does it leave us? It leaves us saying that the gold action has been stupendous. To go this long, have a sideways consolidation, do a retest. It says, have a look at your counterpoint, have a look at the mirror image, as well as your longer time frame. Well, the weekly says leg C, peak C. 200 period moving average of 121.25 is now a magnet instead of being a repellent. MACD in the weekly is very strong. The stochastic is given a Chapman wave squash, which says you can get to a C very quickly, which you have, and then take a little bit more time to get to the D, which is what's unfolding right now. But at 120.29, to get to 120.84 is like an eye blink, right? Could happen in a second. That means that we need to go to the dollar, the DXY. Now, this is the reason why I wanted to get us into the commodity area. Two things. One is bonds are pulling back, which says that the yields could start to go a little higher, number one. Number two, the Dow has made a leg D. Some of the indices have gone to D or an E. So we're in an area that says, look at the resistance here. Let me show you on the Chapman wave support resistance area. So now Alta's pulled back a little bit, watching that. It's up only 52, but that's fine. Let's look at the Dow, INDU. Now look at these. This is the 10-minute. This says you've got support at 16,804. But it also says, look at all the resistance levels in the daily. 16,937, 17,102, 17,175. The weekly doesn't show anything on the upside for resistance, tremendous support levels, but they're way down. Hey, wait a minute, the 120-minute chart has 15,871. And today's high has been, we quickly find it here. Today's high has been 16,000. Is that the high? 830, no, 60,900. So this is very interesting. Look, all those resistance levels in just one support. So that says to me, be a little careful here. I don't have any major sell signal yet because the MACD and stochastic are so strong. And look at this one here. Very, very strong. There's another Chapman wave technique here, these colored MACDs and stochastics. Well, it says to me that there should be some kind of a pullback, and there is. But the dollar and the bonds, the dollar and the market have actually traded pretty well together. So this is where I have to be a little bit careful. So we've raised stops on our long positions, that is in the market type positions. But at the same time, the pattern that we're looking at in the weekly chart of the dollar said, wow, you were so close the other day to getting towards the test of legs, peak C at 100.51. Is this the time to pull back? Well, you know what? The daily chart, MACD is very good. Stochastics at 90%. I want to see where the dollar stops this pullback. Because if you look at the EUR USD, it's having a little bit of a bounce, but off two doji-type candle lows as the stochastic went flip to the upside, 8.23 now, and the MACD is flattening out. I'm suspecting that we're looking at the arch pattern in the weekly, the lowercase h to a lowercase m. I don't know if it's going to start from here, yesterday's low, or whether this is just another one of those little bounces that tests the low again. But it could start higher, and I wanted to be prepared because of the action in the dollar. And remember, we spoke about the A pattern. Where does an A pattern come back to? It invariably comes back. If it breaks halfway down, invariably it'll come back to a left side low of importance right here. Let's just do the left side, right side price time match. And that says you've got to do your price time match. And we came within a day and just a fraction of that right side style. Look, within a day of testing. So this is a successful test of the H pattern so far. So there can be a bounce. Where can the bounce go to? The USD JPY, the euro dollar currency pair could test 1.1067, the high of the week of the 26th. And that means that the dollar could go a little bit lower. That means I've got to watch the markets very closely here. Why? Because if you go to, let's go to the SPY we were talking about the other day. The SPY is in leg C, E/C, could be a peak right here. But the MACD is good and stochastic's good. So my suspicion is that 200.10 level is still a magnet. And that's the reason why I still want to remain long as long as possible, that is. So, hope I'm covering a couple of things that are important to you. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I'm just going to say that I think that oil has a chance to at least rally a little bit here. How high is going to be the issue? That's number one. Number two is I'd be looking at the package. I'd be looking at copper. I'd be looking at how are these commodities, soy. I'd be looking at everything. Are they going to rally here? That's important. So let me just answer a couple of questions. Let me go quickly by order. I'm not sure, Bob, what you meant, NFP. Could the S&P rally or fail? How do you trade the NFP on Friday? NFP, that's one of the economic reports. I'm not sure which one it is. National, I don't know what it is. Could we get a big sell-off Friday into next week like we did of March of 2015? I'll deal with that in a second. Let me go to the next one. The question is Halliburton, HORH. Let me just do this. I've got on the screen here WHR. I'm going to get to that as well. I hope I remember. That was the fourth question. Yes, so you've got Halliburton, you know, these oil service guys, they've just been smacked. I mean, I wait, HAL, I got HAR. Yeah, HAL. HAR was a question yesterday. Harman International, that's Harman Kardon, the stereo sets and stuff. A nice bounce is a bounce for now. Let's just go to HAL. Ooh, that was a mistake. HAL, so it's funny, it's the same chart. A, B, C, we've just got an ABC under there, ABC, and now you've got an overlapping wave, Chapman wave, overlapping wave, going to a D, should be strong. I like this. I think Halliburton's, yes, I think that oil is going to move higher. I'm going to be watching real close to see what happens in bonds. I think that there's a chance now for there to be talk once again about maybe interest rates, just keep it there. We're not doing anything, but we are looking, and that's going to be something the market's going to have to deal with. Okay, I don't know about my Japanization of our bond yields at that point, but the commodities saying, hey, when these start to move, you've got to watch for a little bit of inflation. So Halliburton, I like it. It's in leg D. I don't know if you've got it. If you've got it, it's great. I'd hold it. I'd just say that be careful. It's a 34.10 HAL, up 44 cents. The 32 to 30, 32.5 to 32 area is good support. Let's just deal with that in another 2 days. Let's look at it again. OIH, let's do that. Dollar OIH. Dollar OIH, was it dollar OIH? No, just plain old OIH. That's oil service, market vectors oil service. Yep, it's rallying as well. Leg AB, this is leg C, unless there's something before that. There is. ABC is the same chart. D. It's in leg D, very strong. When you're just coming off lows, it's easy to make the D. That's not at tops. You want to be careful of Ds. Coming off a bottom, you expect a D to pull back and then recycle or restart or have a Chapman wave instant start. And this is a very severe 50% decline from the top, from the bottom that was just made to the price that you're at. And that would say that OIH at 26.23 up 86. Nice action. I like it. I think we're looking at new sectors, and that's part of what I call the rotational correction and the recession, the rolling recession. So here we go. So the answer is yes. Next question was FCX. Good. I haven't looked at that since we had it and got out of it. FCX trading at 8.97, had a low back at $3.52 in January. A huge move up. Alternate count F/B, MACD is good, stochastic's good. Anytime FCX pulls back from 897 into the 786 to 760 area, I'd be nibbling on it because I think it's made a turn that says this could be a 2-month counter trend rally. A really good, it's already in the second month, 2 to 3 month counter trend rally. That's the way I'm looking at it. The next question, a RUT index. What's the question itself? Let me just swing around here, excuse me. What are major resistance levels you're looking at in the RUT? Okay, so let's go. You want rate major? Let me look at this. This is the IWM. If you don't mind, I'm going to the IWM. That's the Russell 2000. And the 106.03 to 106.24, and it's already gone to 106.77. So it's broken above. So it's saying this is a positive, but then we'll go to the 120-minute chart. I don't see anything there until you go down to 104.41 as support. I like it. I really think that the RUT index is suggesting that this rotation is continuing, and that's maybe the low-cap stocks, IWM, the low-cap stocks. This is up 0.24%. The Dow's down 0.33%, S&P's down 0.34. This is catch-up leg C. I like the IWM, and I like the way that it's moving above the 200-period exponential moving average in the weekly chart. Do I think it's a big buy signal? No, I think it's a real nice move to the upside, treated as a counter trend rally. So the answer is yes, leg C. There should be higher highs to come in the short term next week. So next question was, so James asks, whoa, this is long. Hi, Basil. If you use the low of 120 on January 20th, we're in leg D today of WHR. Whirlpool, I believe. Yep, Whirlpool. So, yep, that's right. Whirlpool is at 156.46, down 236. It made a 190.59 round number high yesterday. Today it snuck a tad above at 159.04. And today it's down. And it's a very nice weekly chart. It's gone to leg B. This is a counter trend move, different to the others because this made a high of 217.11 with a round number 197 low in February of 2015. And the next month was a 2-bar reversal at 217 round number high. That's the exact opposite of what we've just seen. Round number yesterday high, recovery high. It's fractional high today, and then it's pulling back. Before it made a round number, it made a high of 217.11, and the next month of March, exactly a year ago, it went to 217.00. That's called the Chapman wave 2-bar reversal with a round number, silent round number high. And then it pulled back just a little bit. It went from 217 to 123. I'd say that's quite a drop. So this is a counter trend move. I would say to you that if you're long Whirlpool, WHR, I would hold the long position. I'd take something off right now, but you want to think of maybe putting it back if Whirlpool closes under the 9 EMA of 153, somewhere between 153.50 and 152-ish, the low there, 151.88. Somewhere in that area, I'd be thinking maybe I'll put that money back because it's still acting well and the MACD is acting well. So that's what I'm looking at there. So we covered those questions. Good. Now I can do something else. Before we go to a break, I want to look at the USO. The reason why, I don't know if I can get really bullish, but I can say I think there's a slight turn that's coming. One of the reasons why we wanted to go into this particular ETN. is because it has some crude. It has the different oils. And I think that the oils right now are showing signs that there could be a balance. And the USO, the United States Oil Fund, trading at 9.24, down 6 cents, made a high today, a leg C of 9.41. And I think that it can very well test the candle of the 29th of January, the week of the 29th of January, that had a 988 high. My thinking here is that the USO, as soon as it starts to kick in and hold gains, a little bit like it's done on the daily, but as soon as it does it in the weekly, you'll get a real nice bounce, and the 1262 9-period exponential moving average in the weekly and the monthly would become a target. So this is just the starting process. You don't have to get carried away, but I do think there should be higher prices than the USO. And that leads me to the market, and we'll be back to that in a moment.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Okay, folks, let's just do a real quick summary. I will be back later in the day with John Logan for an interview. And in the meantime, you've got Think or Swim broadcast coming up, the swim lessons. And where does it come to you? It comes to you live from Walt Disney World Resort in Orlando. Hey, visit them there. That's amazing. I didn't know that. Wow. Wow. That's great. Very good. So that's going to be live today. And all I can say is, lucky guys. We've got freezing weather here. Bright and sunny, but freezing and sunny. Okay, here we go. And it's a little upsetting that... Well, we can't complain. We haven't had much snow at all this year. What compared to this time last year, you remember? The 7 foot or something. All right, here we go. The TLT is 129.74, up 78 cents. It is holding the 9-period exponential moving average in the weekly chart. My thinking was that we could still get a D. You don't have to get a D when you're under the previous high. Remember, these are gray, I should call them gray letters, meaning that the stochastic is not over 80% in the weekly. It's at 74. MACD is good. I did have a signal say there should be some kind of a pullback. So how this works is going to be really important, because if we have some inflation, it usually kicks in. It takes a while before you get to see that. And if you do see it, I suspect that you will not get deflation in yields. You'll get some kind of inflation, surely. So I have to watch this real closely. And all I can say is 129 was the support I was looking at before it broke. Now, and it broke. Now the MACD and stochastic are turning down, even though the price is up. If the TLT, the Lehman 20-year T-bond fund, goes underneath, closes on a weekly basis under 127, I suspect that we are going to see yields start to climb for the first time in quite a while. Number one. Number two is, I love the fact that the volatility index is still down. It's down 3 cents at 1706, made a lower low today. The fact that it's in the teens, almost the mid-teens now, is to me a very big and important. Tomorrow's close on the weekly chart, if there is a close under 1748, let's call it 1740, that'll be the first time that the VIX index on a weekly basis is closed below that 200-period moving average since late December, the last week in December. So that'll be very significant, because it'll say buying is going to come back into the market, even with this pullback in leg D. We always expect you've got to expect some kind of pullback once D completes. So that's what I'm looking at here in the VIX index. As far as the Dow is concerned, the Dow is down 61, and it's a leg D, but we made a slightly higher high today, so it's still leg D. That means that maybe tomorrow's another bit of follow-through weakness, and if there's no new high tomorrow above 16,901.37, I'm emphasizing the 0.37 because it was 20 cents higher than yesterday, which means that you've extended leg D. But the MACD is good. I've got one sign here that says, be careful, a little bit of resistance. The on-balance volume isn't really didn't confirm that high. The stochastics at 93%. That's really good. It's this weekly chart. The weekly close is going to be so important. I don't want to see it give back another 150 points on the weekly basis. That'll be upsetting. But we have made a leg D in the diamonds, in the 120-minute chart, the SPY, and you can expect some kind of a pullback. Well, we're getting it. Also, you had the Chapman wave indication yesterday in the short-term trading index. The Chapman wave trend gauge gave a signal to say there should be some weakness in the Dow before a rally, and there was weakness. Then there was a rally. Now there's weakness. There might be another little bit of a rally towards the end of the day. So I'm looking at this. I still see positive signs, but it's also just a moment where we've got to be a little careful, because this is exactly, let me go back to this chart right here. This is exactly on the Dow where you start to see, look at all these resistance points. See those resistance points? They are a little bit higher, but it does say this is the area you start to see resistance. Thanks for being here. Stay tuned for your swimming lesson. And I'll be back later in the day. Otherwise, I'll see you tomorrow morning for another Tiger Technicians Hour. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.